got Prabal Sen joining in right now on the show from ICICI Securities. Prabal, I don't know if you caught Mihir Vora, our previous speaker, and his thoughts on the energy sector, especially in light of the parabolic move on ONGC and Reliance just yesterday. What is your own thought on whether these are just tactical plays, or do you think they should be part of your long-term portfolio?
Um, I think I would not even try to comment on Mihir sir's comments. Not my place to sort of contradict him in any way. Having said that, I do believe that if you look at the oil and gas sector, typically the periods in which Indian oil and gas sector does well is when crude prices and gas prices are in a certain range. And whether by chance or circumstance, what has happened is that if you look at the crude price range today and the likelihood of where it's going to be over the next 9 to 12 months, the prices are likely to be in the 75 to $85 range, which tends to be, at least in the current environment, a pretty sweet spot for one, margins to continue to stay stable or high, specifically on the marketing front, and also GRMs to also continue to be in a range of $9 to $11, which we believe is a very strong level for earnings growth to continue, at least for refiners in the country. Similarly, gas, we are seeing that the kind of weather patterns that have been there in Europe for the last 2 years, the kind of inventory buildup they've had, and the prospects of LNG supply, despite the current US decision to put on pause new projects, the existing plans itself ensure that supplies are going to be adequate for global LNG requirements over at least the next 2 to 3 years. So, from that aspect, given that as a country we continue to be price takers for both oil and gas, the easing of prices in a certain range is essentially very positive. Specifically for ONGC and Reliance, I think earnings growth is something that's going to continue to be very strong. Reliance, very clearly, with the multiple levers of growth from retail, from the improvement that is expected by our telecom team in Geo in terms of tariffs as well as subscriptions, and the momentum that they continue to show in the retail business, we believe that EPS can continue to grow for a company even on this very high base at about 15% CAGR over the next 3 years, which is FY24 to 26. And similarly for ONGC, after a 7 8 year lag, now the production growth is becoming a reality, at least from a 2 to 3 year perspective. Thanks to the startup of the KG Basin asset, it reverses actually pretty much a last 7 8 year old trajectory of sort of muted production and realizations, despite windfall taxes at the levels of 75 odd dollars for oil and $6.5 in MMBTU for gas, will continue to be at a 7 8 year high. So both those stocks, I think, from a growth perspective, are expected to remain fairly strong.
To Reliance, is it right to only look at their O2C business? Because that's almost, that's like 25-30% of the business. On some of part, it's retail, it is Geo, it is the new energy business. What's the right way of looking at Reliance now?
I wish I knew the answer to that. I think the issue is that, and I never, the earnings growth that we spoke about of 15%, ironically, is not really coming from the OTC business. The OTC business, we believe, despite the fact that I spoke about refining being in a good spot, petrochemicals, which is an equally important part of within their OTC segment, is not likely to actually grow any by any significant way because there's a lot of oversupply that exists in the system. So if I break it down in terms of where earnings growth is coming from, it's more from the telecom business, it's more from the retail momentum, and some portion, low single digit growth is what we build in from the OTC business. The way to look at it right now is if you look at what will be the drivers for the stock or the business for the next 3 years, one very clearly new energy, whatever milestones that we keep hearing in terms of hitting the commissioning of the first few units, any commercialization of new technologies like sodium based batteries, which they're trying with their Faradion acquisition on the battery front, and of course, in terms of, what kind of numbers start to actually come from the new energy business as and when it commissions. The third aspect that I would also look at is that there is a significant amount of capital allocation that has happened in the business in the last 3 to 5 years, and there is expected to be more capital allocation on new energy and continued capex on retail as well as Jio. Now, what happens to the FCF yields, what happens to the return ratios, those I believe are also probably slightly overlooked factors in the kind of strength that the stock is showing right now. And that is something that makes us a bit more cautious at these levels of predicting outperformance, at least in Reliance over the next 12 to 18 months.
Importance would you pay to their capex cycle? Because historically we've seen in last 20 years, Reliance 2 years ahead of the capex cycle starts moving, and 2 years after a new capex cycle is announced, it starts underperforming. That 2 year window gets over now.
Yeah, exactly. So what has happened is you're absolutely right. In the last 10 years, there have been multiple instances where the stock has outperformed quite significantly on the expectation that the capex cycle is now over. We're going to start to see massive FCF conversion happening, and therefore, leverage going to continue to go down and a huge expansion in return ratios. And that I think has been held up because there has always been the next big thing that Reliance has been basically betting on. Firstly, it was the petrochemical expansion, then it was telecoms, now it's probably new energy. So we're going to have to see whether the capex cycle ever comes down below that typical, I think, the sweet spot of around 80 to 85,000 crores, which enables a much more positive delta in return ratios and FCF yields. As long as capex remains in the range of 1.2 1.3 trillion rupees, which they have been doing and are likely to end this year also with that level, I think that transition to high double digit return ratios doesn't really happen. Now it's another matter what investors are looking to put value on, whether the bet on new energy is significant enough that they, this portion is this part of the valuation story is overlooked, and that's something that I think the markets will basically decide over the next 2 years.
Probably going down the line, what do you think are going to be some of the key catalysts ahead for investors when it comes to Reliance Industries? Will it be retail and telecom as the key drivers?
I think any sign of actual tariff improvement in telecom will probably be keenly watched. Retail, I think, the growth has been fairly in line and has been meeting or beating expectations. So obviously that continues to be a monitorable. I think news around the new energy businesses, as and when the first of the units gets commissioned, and what sort of results actually come through, how soon it sort of starts to actually reflect in the EBITDA numbers, which I guess today is likely that FY26 will already start to show some of those numbers. And how do the initial results look like, whether it's the battery facility or the solar manufacturing unit, which are the two perhaps earliest ventures that are likely to get commissioned. I think those will probably be the keenly focused triggers.
Thanks so much, Prabal, for sharing with us your thoughts on Reliance Industries and what really is the outlook for the overall space as a whole. In fact,